Hello, great businesspreneurs. So let's look at a topic that is fundamental to all businesses, whether small, medium, or large. Introduction to bookkeeping and accounting for SMEs. So this topic is actually fundamental to all businesses. You know, every business must keep one form of record or another, and it is also required by the law. Now, the question I often ask business owners is this: are you passionate about your business, or do you just run your business? And when I get answers like, I passionately run my business, or I give my business all it takes, now I know that you are very intentional about your business. Now, why does it matter? Why does it matter for you to keep records of your business transaction? Now, accounting is the backbone of businesses. Why? Because accounting stores your business information. What you've done today, it might be relevant, it will be relevant for you tomorrow. But if you don't keep record of it, how do you now retrieve such information? So many businesses fail because owners do not understand their numbers, and not because they have poor products. A business owner who cannot explain how much he sells, how much he spends, how much stock he has, who owes him, who he owes, and whether the business is making profit, is operating blindly. So accounting provides the financial information you require to make sound business decisions. And then it starts with bookkeeping. Now let's look at bookkeeping versus accounting. What are the differences? Bookkeeping and accounting are interrelated. You cannot do one and leave the other. It starts with bookkeeping, then it moves to accounting. So when we talk about bookkeeping, number one, it records daily activity. So bookkeeping records your daily activity, your daily sales, your daily expenses, your daily purchases. While accounting is a periodic activity, say weekly, say monthly, say quarterly, say half yearly or yearly. Number two, bookkeeping deals with data entry, while accounting deals with strategy. Now, when you make a sales and you put it down, like one Ankara fabric sold for this price, so that is data entry. Now, accounting compiles those data, put them into meaningful information, and use it to set strategy for the business. Number three, bookkeeping records income and expenses, e.g., keeping receipts, sales records, expense records, stock records, debtors and creditors books. So when you keep each of these records, you are doing bookkeeping. Now, accounting generates your financial reports, such as profit or loss account, balance sheet, debtors and creditors, age analysis, your cash flow statements, and the likes. Now, bookkeeping is the foundation upon which accounting is built. Without proper bookkeeping, good accounting is difficult. That is a fact. So you cannot do accounting if you don't have a bookkeeping system in place. You need to start with a good bookkeeping. Why should entrepreneurs keep records? Number one, know whether the business is making profits, whether you're making revenue. Revenue is not profits, right? A business can make huge sales, but still make losses. Two, monitor cash flows. Cash flow is the lifeblood of every business. A profitable business can still fail if it runs out of cash. So as you are selling so much, you are selling in volumes, you have to ensure that you are collecting the cash. If you give a lot of credit and you are not collecting the cash, you are not ensuring that the cash comes back to the business is at risk. Number three, you are able to control expenses, because when you keep proper books of accounts, it will expose unnecessary spendings, it will expose leakages, wastages, and where there are frauds. Now, it will enable you to obtain loans and investment because why? Banks and investors request financial statements before providing funds. Businesses without records struggle to obtain financing. Number 5, it's a matter of regulatory compliance because accurate records ensures compliance with tax laws, CAMA. It ensures correct tax computation. It makes your tax filing easier, and it reduces penalties, right? Number 6, you are able to make better business decisions. Why? Because business decisions should be based on facts and not assumptions. And how do you get those facts if you don't have a bookkeeping system and an accounting system in place? All right. Now let's look at the common bookkeeping mistakes, right, that entrepreneurs make. Number 1, mixing personal and business money. This is very common for startups. Number 2, I'm too small for records. No one is too small to start keeping records. Even as an individual, you should have a filing system for all your records. Like personally, I have a file for all my certificates, right? My dad taught us how to keep records, right? So as small as your business is, even from the first day you started your business, you should start keeping records. Those receipts, have a filing system for them, have a way of recording your transactions. Not recording daily transactions. Bookkeeping is a daily activity, so you cannot trade that. Not keeping supporting documents, right? Ignoring bank reconciliation, not issuing receipts, losing invoices, waiting until year end before preparing records, not backing up financial records. Now, you should open a business bank account and then start tracking your income and expenses. It is very important. If you're yet to open a bank account in your business name, please do so. It will help a lot. Now, let's look at simple accounting tools that you can use to keep records of your transaction. Now, as a startup or as a small business owner, you can start by using exercise books, to keep records of your business transaction. You can start by using exercise book. Record your sales, record your purchases, record your expenses, right? As simple as you can do it. Now, you can also use cash ledgers, cash books, but these are already fading out. Now, you can use Microsoft Excel if you are proficient with using, the Microsoft suite. You can also use Google Sheets. It's also a very good tool to start with. Now, as your business grows, you can adopt accounting softwares such as ZoroBooks, QuickBooks, Sage, and the likes. So the essence of you starting with those simple bookkeeping tools is because your business is just starting out, and then you grow from there then to buying an accounting software. All right. Or you can even hire a monthly bookkeeper. You can outsource to firms like us if you're up to the task. You can do that. Now let's look at the regulatory relevance. Now, bookkeeping and accounting is required by law. Every business operating in Nigeria must maintain proper records of their business transactions. So Section 31 of the Nigerian Tax Administration Act says every person, including a company granted exemption from incorporation, shall, whether or not the person is liable to pay tax, maintain books or records of account. So what this is simply saying is that whether you are small, whether you are exempted from tax, you must keep books and accounts, because at the end of the year, you have to file your return. So what do you file if you don't have a recording system in place? You can read up the rest. They are very self-explanatory. I want us to quickly look at other sections that also talk about bookkeeping and accounting. So let's look at Section 102 of the Nigerian Tax Administration Act, which talks about failure to keep books. Now, this one says a taxable person who fails to keep accounts, books, and records of business transactions and income to allow for the correct ascertainment of tax and filing of returns to the relevant tax authority, or, upon request by the relevant tax authority, fails to provide any record or books prescribed in this act shall be liable to pay an administrative penalty in the case of one, a person other than a company, 10,000 naira, and in case of a company, 50,000 naira. So if you're a business enterprise and you're not keeping proper books of account, your penalty under the law is 10,000 naira if the law catches up with you. And if you're a limited liability company, your penalty is 50,000 naira if the law catches up with you for not keeping proper books of account. Now, Section 374 of the Companies and Allied Matters Act also makes reference to keeping records of your business transactions. You can also read that up. Now, these are all the relevant sections that talks about keeping proper books of account of your businesses, right? And the directors of the company are responsible for preparing the financial statements of the company. So it is statutory that at least once in a year, you must prepare financial reports of your business transactions. But internally, as a business owner, you shouldn't wait until the end of the year to review the performances of your business. So you can review your records on a monthly basis, you can review it on a quarterly basis, you can review it half-yearly, but not once in a year. Because how then do you monitor the progress and growth of the business if you're just doing it once in a year? But statutorily, you must conduct an audit and report on your financial transactions once a year. Now, in conclusion, bookkeeping and accounting are not merely compliance requirements, they are essential management tools. So don't look at bookkeeping as, oh, I just have to comply with the law by keeping it. No. Personally, as a business owner, as a management team of your business, as a board of directors of your business, you are responsible for ensuring that that business is running perfectly. And then preparing financial reports of your business. So it is an essential management tool because you need it for you need the information for decision making. A business that keeps proper records has greater chances of surviving. True. Successful entrepreneurs do not guess, they measure. And as the saying goes, what gets measured gets managed, and what gets managed gets improved. If you fail to run your business properly, then your business will definitely run you. Asking about how you can start keeping your records of a business transaction, we have developed this bookkeeping template. It has been professionally worked on, which you can use. If you get this template, you'll be getting our professional guidance, because there's also an explanatory video that will guide you on how to use the template. And aside that, we can also guide you professionally on how you can be able to start, keeping records of your business transactions. So in this template, you are going to have sales record template that you can use, expense record template that you can use. You'll be able to compute a VAT, on your sales and expense transactions. You'll be able to, monitor your cash. You also have basic inventory, management, system set up in this template. So if you're interested in this template, you can reach out to us, or you can just click on the link that is showing on your screen. Thank you very much. And here is our contact. You can also always reach us anytime, any day. Thank you. If this is helpful to you, kindly share and follow us on all our social media handles.